At first glance, it looks like the Toronto real estate market woke up just a bit in September. Sales came up, prices came up too, but as we all know it is too good to be true just yet. The truth is the market actually got weaker in September, and I'll explain the key things to watch out for in this current market these days coming right up. On the surface, the numbers could grab headlines. Prices jumped up compared to August, sales climbed as well, and detached homes in the 416 even showed double-digit price gains month over month. And that kind of momentum sounds like things are improving. But here's the catch. Listings exploded. Over 19,000 new listings hit the market, 37% more than the month before. So when supply grows faster than demand, the market naturally loosens, and that is exactly what happened. The new sales to new listings ratio, one of the best measures of market balance, fell to 29%. And the lower this number is, the more power shifts to buyers. And at 29%, buyers clearly hold the upper hand. So why did prices still climb? Well, it does come down to timing and mix. Early September was busier than usual. Our team saw a rush of buyers who've been waiting all summer. The moment a decent listing hit, they jumped in. And that short window of tighter conditions helped push prices up. The second factor is sales mix. In a softer market, it's usually the stronger homes that move. Larger properties, move-in ready homes, and prime locations. The smaller, rougher units usually sit, and because more of the good stuff sold, the overall average price came up, even though demand was still weak. And that is why this isn't a real rebound. With a surge of new listings coming on later in September, we will likely see more price pressure showing up in the October data. Now, let's look at the segments as well individually. Condos are still the weakest short term. They're overloaded with supply, investors are pulling out, and demand just isn't there. Prices are looking flatter than they should because many of the lower priced units are just simply not selling. In the suburbs, the 905, this is also another weak long-term market. Families will always still want the space, but they are priced higher than Toronto condos. They're less desirable from a location standpoint compared to the 416, and builders keep adding new supply. So this combination will drag recovery out for more years. Now, detached homes in the 416 will be more stable. End users will always want them, and so they naturally hold a floor. But they don't work as well for investors who are focusing on cash flow. They do make sense though if you are adding value through multiplex conversions or redevelopment. Now, semis are going to be the clear standout. They appeal to both end users who want affordable space and investors who want cash flow. They rent well, they convert well, and they're the most resilient product in today's Toronto market. So here's the bottom line. September's market wasn't a rebound. Prices rose because of timing and sales mix, while the real story is that buyers do have more choice than ever. And that means urgency is gone and the power is firmly on the buy side. For investors, the path is clear. Skip condos, be cautious with the suburbs, and multiplex semis are your best bet for cash flow and resilience. Detached homes in the 416 might make sense if you are planning a bigger redevelopment or you find a motivated seller who's been sitting on the market for a long time. And remember, you don't have to figure this out alone. At Elevate Realty, we're not just a real estate sales brokerage, we're advisors, planners, coaches as well, specializing in Toronto multiplexes. So we can help you spot the right opportunities, crunch the numbers, negotiate and buy the best option for you, plan renovations, place tenants, and manage the property for you as well in the long term so that you can focus on building your wealth. And if you are serious about investing in Toronto, just head over to this link here and book a free strategy call with us today.